Just before the break, let's get into a conversation with the management of Cantable Retail. We have Mr. Shivendra Nigam, the CFO of Cantable Retail India, joining us on the show. Mr. Nigam, hi, morning, and thanks for your time. Trying to understand how the quarter has shaped up for you. It's largely been a good quarter. Your profit is up about 32%. Revenue has seen an 18.5% jump, and the margins have also expanded quite smartly. I want to try and understand your outlook on the same-store sales growth number that's coming at 5.8% this time, and you've guided that this is going to improve in high single digits going ahead. If you could give us some color on what this number could be, any guidance on that front?
First of all, good morning, and thank you for having me on the show.
Morning.
So yes, the quarter was fabulous for us. We have expanded margin in all aspects. Gross margins have been improved as far as the EBITDA margin is concerned. So revenue, as per our expectation, has also came up very well. So as far as same-store sales growth are concerned, we have always given a guidance of approximately 6 to 7%, which we achieved in the quarter itself. But this quarter, it may be we are looking ahead of that. But overall, for the annual guidance for this financial year, as well as for coming financial year, 6 to 7% continuously same-store sales growth we are targeting, and overall target to expand revenue approximately 20% year-on-year basis.
Okay, so 6 to 7% is the same-store sales growth that you're targeting. I'm just taking a look at some of your internal metrics. Your average bill value, average sales value, they've all grown quite nicely. Volume growth is also at roughly 17.8%, with 50% of your customers being repeat. Talk to us about what is the outlook on some of these metrics in terms of your annual bill value particularly, that has seen quite an uptick on a year-on-year basis.
So we are continuously working in all our basic KPI, which is very important in retail for us as well. So for an annual basis, last year we closed approximately 800 rupees per square feet of sales, which we are targeting still on this financial year. Because as we mentioned in our earlier commentary as well, we are opening the bigger stores now. In last 9 months, our opening average size is crossing 700 square feet of the store, which is much larger than company's average size of 1400 square feet, right? Then another guidance in terms of average bill value is also increasing. We are expecting 5, 7, 8% plus from the last financial year and going forward also. So all the basic KPI is very important. Our basket size has been increased. From last year, our basket size for this quarter is approximately 3.8, which has been increased to 3.95. So overall, 4 plus basket size with this average value, we are absolutely on target.
Okay, so that sounds good. Mr. Nigam, also talk to us about your Vision 2027. Your EBITDA margin range guidance is between 28 and 30%. Already this quarter, your number is at 35.6%. Talk to us about if you're looking at hiking your EBITDA margin guidance since you're already way above your target band.
So this is the quarter where we are achieving highest of the EBITDA margin because the ticket size has been increased. Discounts are controlled in this size, mostly fresh sale is being on. So on an annual basis, our guidance is still yes, 28 to 30%. But the encouragement what we got from this quarter, it may be able to close above 30%, 30.5 or 31%. But overall guidance for 30% absolutely on intact. It is still definitely going to cross.
Okay. Mr. Nigam, talk to us about what is the outlook on your international business. If you have any exposure to any of the regions that we have recently signed trade deals with. And also the other thing that I wanted to understand is this kind of accelerated growth that you've seen in Q3. How much of it has been due to the GST cut that we've seen on a lot of retail items like fashion accessories and other categories in that basket? And how much of that has actually been organic growth?
So coming two questions you asked. So coming to your first question, we are not much there in export. We have few stores in Nepal and which we are expanding. There is a limited geography in Nepal itself. And then we are planning to go other areas, but definitely immediately nothing is on the card. As far as the GST rate cut and rationalization is concerned, yes, definitely the day 20th of the September, 22nd September, in fact, the GST came. There is definitely a big boost we have seen in the market, in the consumer sentiments as well, right? So important point is that Cantabil is a perfectly poised and in cash this one because our sale from 1,000 to 2,500 rupees is 60% of my total sale in this bracket, where rate cuts have happened from 12 to 5%. So probably we are going to have a major benefit on this. And we have seen in the traction itself, October was tremendous, November was great. December, obviously, marriages was said, there is a delay winters as well, so slightly on a flatter side. But we are perfectly priced to take this benefit.
Okay. Mr. Nigam, we're very short on time. I'm just going to try and squeeze in one last question with you. Your Vision 2027, your store count that you're targeting is 725. You're already at 646. What is going to be the plan to ramp up your store addition to reach the 725 mark? What is going to be the geographical targeting for that?
So yes, everything is on target. We are definitely crossing approximately 1,000 crore revenue mark in FY27, and stores numbers would be 725 to 750. This year, we are opening in this quarter more 20-25 stores, and next year also 60-70 stores on net basis. So all the numbers are on target, including my revenue, 1,000 crore of revenue mark by 27, and in fact, in the case of number of stores, 725 to 750 stores would have been there. As far as geographies are concerned, so it's still concentrating. We are already operating 21 states in India, so that would be more robust.
Okay, Mr. Nigam, on that note, thank you so much for taking the time out and joining us and speaking to us about the quarter gone by and, more importantly, the outlook ahead. Thanks once again for your time.
Thank you so much.
Okay, viewers, on that note, we completely timed up on this edition of